Good morning, all, and welcome to today's video. So, I have just the one pair on watch today, and that is soybean USD. I've just taken some of the other pairs on watch. Um, for example, Euro Kiwi. I'm just going to show you that quickly. If we can get it up, where is it? There we go. So, Euro Kiwi, let's just zoom down to the lower time frames. So, as I said yesterday, when you've seen things enough times, sometimes you can't really explain what you mean. Sometimes it's difficult to explain what you mean, but sometimes you just have to trust this person speaking that they've seen it enough times. And I had yesterday, if you remember, I had this there, I believe, as my area of value. And I said to you that I was looking at this, or it might have been a different pair, but I said to you when we had a high like that and we had a little hump to the left of it, as I put it, I said, usually what happens is this happens and you get tagged out and then it goes from there. And you can see that's exactly what happened. Okay, so I didn't manage to get an entry on here, and you would have had to trade through when this came back up. You would have had to trade late into the evening around swap hours. I believe this here as well was news. I think there was some news coming out. So when you've seen these things enough times, so couldn't get an entry there, they just get blueprinted in your mind. So that is Euro Kiwi. I'm just going to move on. Just thought I'd show you that, just to show you how these patterns repeat themselves, because they're indicative of human psychology. Okay, and I've had a couple of conversations with people about trading. I try not to do that anymore in public, and the thing that you often get is, how do you know that these patterns are going to keep repeating themselves? It doesn't mean they'll always work. Okay, well, if they're human psychology, if they're indicative of human psychology, then what you're saying is that human psychology will suddenly change. Okay, when these patterns have repeated themselves for at least the last 180 years. Okay, obviously the data was a little bit different back then, but if they've repeated themselves for that, human beings haven't changed, to coin a phrase, since the Garden of Eden. So why on earth would we think that these patterns would change anytime soon if they are a reflection of human psychology? Okay, but anyway, let's get into this pair. And one of the things I often say when people say that to me, I do apologize if you can hear the oyster catchers in the background again. I say to people, well, if these patterns don't keep repeating themselves and they suddenly don't work anymore, then you probably want to draw your money out of the bank, because the banks are trading, and they do, excuse me if you can hear that, I might have to shut the window in a minute. The banks are trading, a lot of them are trading, they're trading technical analysis patterns. So if these patterns suddenly stopped working, then you probably want to draw your money out of the bank, because they're trading your money. And then you usually get a blank face and they look at you like, oh, as if to say, oh, I didn't know that. So always amuses me, that one. But anyway, let's get into this pair. Soybean USD, we have on the higher time frames, we have this high here where I may have to shut that window. But we have this sharp move up followed by that sharp sell-off. Okay, so at some point, especially as we have a near miss to that area, we're very likely to return there. Okay, and I'm seeing this potentially at some point as a move up to there to take out that high, which this high near miss to, which would give us this kind of structure and this expanding pattern where we have lower lows and higher highs. Okay, so that would be an example of an expanding pattern. But as I said, at the moment, the question I ask myself is, okay, well, did we respond from somewhere to warrant that idea? Well, yes, we kind of broke below here and then moved to the upside. And this was a near miss to this little exchange of liquidity there. Okay, which almost happened to be the retest of the back end of this. Okay, so we kind of came down. Okay, this was a kind of a failed sell idea. Okay, we started to sell off and then moved to the upside. So there's a little reference point here, which this point near missed two. Okay, so this could act as a base for that move. Okay, but if you look at how prices moved up, okay, that is not a typical sell-off, and not a typical start to a move that's going to rally to the upside to do what I just said. Okay, so what this is looking like to me at the moment is it's looking like, especially as we have a near miss there down to there, is that we may get this move down to there to give us kind of this double bottom bounce for then that. Okay, because that would make more contextual sense, because underneath this little reference point here, there's not really anything which, if this is a one 2, 3 touch structure. There's nothing really below here that price could form a base off of for that move to the upside to occur. So this to me just looks like this kind of 1, 2, 3, which you'll see more clearly as I drill down to take us down to there, to give us that double bottom bounce to the upside if this structure is actually going to occur. Okay. So last week we had this kind of bullish high test candle there, but most of the wick was below this area of value, which is a little bit more visible on the daily chart. So although I was looking for shorts last week, which I didn't manage to get, I'm not surprised that we've come back to here, okay, because most of the wick was below here. So we kind of, to some extent, wicked to this area, not necessarily through. Yes, it was slightly through, but most of the wick was below, okay? So, and the clue, as I said in one of my earlier, what day are we? Wednesday, I think it might have been Monday's video, when we get a weekly close like this, green with a big wick below it, that is often a good indication that we're going to come back up to fill the other wick, okay, the prior wick. So we have that 1, 2, 3 touch structure here. We have that. Once again, what do we have here? Look, this is not indicative. If we're going to move to the upside, we would likely see more tighter corrections like that, and then see more volume built in this area. Instead, what we got is this there's lots of parts to this puzzle, which when I've only got one pair on watch, I can dissect more of it for you. A lot of these things jump out in the moment to me, but when I've only got 20 minutes to break down several pairs, I can't go into quite as much detail. But we come down, that in itself tells me that this is probably not a move to the upside, okay? The other clue is that we don't get volume coming in at this area. We get, this is usually indicative, these moves of volume getting out at the end of structures such as this. We then had the evening star formation and the push down. However, when the picture started to change a little bit was here, okay? So we had this, okay, if I just drill down to the 1 hour, okay, so already this kind of, when we kind of wicked above here and we form something like that, already that's quite large relative to this. Even then it's only a wick, but this wick down that has preceded it, okay? And then we have this, so that was the first clue. Then we get this tighter correction. And then I was looking for, a move. I was looking for an entry here in this area here. Didn't manage to get it. But again, this was quite wide relative to the move down that had preceded it, quite, within this range. So from here to here, usually these would occur about halfway down, okay, more or less. So already that was giving me a clue that perhaps this is not ready to go. And then I said, when we got to here, okay, this was so wide relative to the move down which has preceded it that I could easily see this pop into the upside to give us an M style pattern, okay, which seems to be what's happening at the minute. Okay, but we've had that. It doesn't surprise me that we've had this a bit of a FOMO, what looks like a FOMO sell-off. Okay, if we just take the price action, that's a corrective move down all in all, and it doesn't surprise me that it hasn't committed. Why? Because it didn't tap the area of value. Okay, so as I said yesterday, when prices in this area, okay, there would have been orders likely up here anyway, but when we're in this area, people would have likely started placing orders here. So if there is a sell-off, then those orders likely need to be filled before price can move to the downside, okay? So I'm not surprised that we got this sell-off and then this large correction again relative to this move down which has preceded it, because of the fact that the orders up there are likely dragging price up whilst people are still trying to sell this, okay? So I don't think this is going to be ready by the end of the day, but again, it doesn't matter what we think. What I will be looking for from this pair is, I'll be looking for the following. I'll be looking for that tap into the area of value, okay, followed by a 1 hour impulse down below our area of interest. And we may get an alert go off in the next 5 minutes. We may get some alerts going off because there is CPI data being released in the United Kingdom. and that may cause my alerts to go off on pound Aussie and on pound Swiss. But what I'll be looking for from this pair is a tap into that area of value, a 1 hour impulse back down below this area of interest, and then if we were to zoom out, okay, if we were to zoom out to the daily, for example, that would be pretty deliberate. So if we got a tap into that, a move down, and we're now trading below here and below here, that would, and the correction afterwards, that would be a washout of liquidity from these areas, and then it would be very likely that these M style patterns tend to play out aggressively, that we would get a move down to those areas. Okay, so if we got that entry, so if 2-touch 15-minute continuation, 6 to 8 corrective 15-minute candles as a minimum, then I would set an entry on the break. If we got the two bottoms, then I would also be looking for the risk entry within it to see if we could tag the first top or the second top if it was or the first top or the second top if it was a 3-touch structure, and then I would look for the risk entry within it as well. I would be able to manage this down to here for about 3.5-4%. I don't think this low would hold much weight by that point. And then what I would do is I would measure from the range to where I believe that we would likely get to, and then I would set a take profit at the 90% mark, which just so happens to coincide, as it often does, with a sharp move there, okay, which is where price pulls back, can pull back 50% of the range. So even if we were going to head lower, we can get something like that. Doesn't have to be a 3-touch, but something like that before it pushes lower. And then if you just look at the risk to reward tool, you've potentially given back about 4% of the profit for something which may not even commit in the end anyway. We just might even just, after you've waited through all of that, which could take about a week, for example, it might just not commit and then continue trickling. And then we end up with something like that and that kind of structure. Okay, so that is what I'm going to be looking for from soybean. So it's not about greed. One of the biggest downfalls of traders is greed. And the way that you scale in trading is to recognize your profits, take profit where you can, and just look to reconvene. Okay, if any of these entries of mine ever shape up, then I'll be able to do that. Okay, but there's been very little in the way of entries, but it is what it is. I'm not going to jump in just because the market has not provided me with the entries that are forecasted. Of course, I study my documentation and I ask myself, is there ways that I could be more aggressive without compromising risk? The key bit there is without compromising risk. What traders do is when there's not many entries shaping up, with regards to whatever strategy they trade, then they start forcing trades and then they give back profit which they may have made, okay, or just go into deeper drawdown, and that's not what I do. I would say my number one strong point as a trader and in life actually is discipline. Okay, I will not waver from anything. I won't waver from literally anything in life. So I don't waver from my discipline in trading either. So anyway, I've rambled on long enough. That is soybean USD. That's what I'm going to be looking for. And there may be some more pairs on watch tomorrow. So if there is, then I will likely have more pairs on watch. But for now, have a great day and I'll speak to you again soon. Thank you very much indeed for watching.